Hello and welcome everyone. This is John Person reporting for PA Stock Alerts. It is Sunday, March 11th. Well, this coming week we have a lot hitting us in the face. Namely, it's the end of the quarter quadruple witching. We have the FOMC meeting announcement on Tuesday, and would like to hear how Ben Bernanke and team will address the employment situation and the zero interest rate policy. So far, there's a few things that are at a I would say a intermarket relationship conflict, namely the stocks and the overall stock market has been surprisingly strong, but so has the bond market. So with the bond market and interest rates being at a near zero rate, if people are feeling more comfortable and confident that the overall equity market is going to continue this toward pace and continue to outperform all other asset classes, then you would expect to see people come out of bonds and put more money into work into the stock market, and we're just not seeing that. The dollar strengthened this past week, and so did crude oil. So there are some concerns and some typical normal market relationships that are not giving us any clues or hints as to when or if the stock market is at an impasse of halting its ascent or getting ready for a further leg to the upside. Our positions as it is concerned with Centerpoint Energy, and that's the chart we have in front of us, this is a weekly chart, did generate a weekly high close doji a week ago. This week we saw an inside trading range. Not much happened. We are long this market from 1908. It closed at 1926. We're still maintaining our long position here. Our stops at 1883. Tight stop, so we'll see if we can get some further movement here with this product. On a daily chart, notice this tall green candle was the breakout, and the market's pulled back to the midpoint of that green candle right here. We call that an open Marabuzzo because it opened and traded higher, and in fact there is no shadow at the opening. It just opened and traded straight up. So that is a bullish candle pattern, and typically the midpoint does act as support. Since it's already come back to test it, we should see this market continue to the upside. Therefore, we're holding and maintaining our position here. One of the things that Tom has been talking about is that if the overall market is performing well and if asset managers are performing well, then obviously why not, instead of chase market performance, chase the asset managers themselves? And thus, that's why we're in Legg Mason. And this chart on a daily basis shows almost this kind of like carving out of a bottom formation. We have a nice little rally, and as you can see, the market's trying to eke out further gains. If this market does break out with any solid volume signals accompanying the breakout to the upside, then I think we have a very powerful rally to ensue in Legg Mason. Looking on a little closer up, you notice that we did generate a high close doji right here from Thursday's to Wednesday's doji to Thursday's close, and Friday we saw some follow through, so that's very promising. We're long Legg Mason at 27.46. It's just at break even. We took a little bit of heat in this trade, but I believe that if the market does see performance for the rest of the quarter, then this is a company, and at least we should see further performance. On a weekly chart, long shadow is telling us that there is some buying interest at these lows right in here. So it's just a matter of if we can clear and get a movement above these highs. I think we have a nice breakout to the upside. It almost looks like we are forming and carving out an inverted head and shoulders bottom formation in Legg Mason. So we're going to continue and maintain our position. We have, again, a fairly close stop with this at 26.47. No change there. One of the, I think, shoes to drop, so to speak, would be, of course, crude oil. And I know there's been a lot of reports and talk that crude oil would take it to go to 120 a barrel in order to affect the economy. And I don't find that to be true whatsoever. It is a concern for me right now that mid-grade gasoline is at about $4 a gallon. And it seems to be a talk everywhere you go of how expensive gasoline is. So with that said, this is an area that we want to be in. Number one, it's tough to get into this space. However, the fact that the market did see this little rally, we went through the sideways area. Let me zoom this in on this. As this old area of resistance, it is now acting as support. So we could see further continuation in the upside in crude oil, or at least a sustainability in prices here. And if that's the case, we want to revisit some companies' names. And one of the companies is Pioneer Drilling, PDC. We originally tried to buy this company and we canceled our orders. Again, the market really hasn't gone anywhere. We had a doji a week ago, a hammer formation this week, so a lot of indecision, and the market's really grinding nowhere fast. However, if we are correct in assuming that the market is going to continue, the overall crude oil market continue to gain momentum headed forward, what we may have seen this past week and a half was just some liquidation headed into quadruple witching. Fund managers get an early start on that event. If that's the case and this market truly is bullish, we're going to be looking to buy a pullback here, and our recommendation is to look to be a buyer. And I'll zoom this up right about the midpoint. And as you can see here, the midpoint of this green Marabuzzo, open Marabuzzo candle, the close on Thursday was 930. The high here was 933. The open here was 931. So there's a lot of confluence of numbers right around that 930 area. I believe the market closed at 963. I believe a pullback to 938 may warrant a nice position, and we will send an email alert out in the morning to signify our prices. But 938 is a justified area to buy on a pullback. And our stops, we don't want to give this a whole lot of room, but I think this targeted area around 877, it's just too obvious. So we'd probably want to put our stops just slightly underneath this last low here around 832. That might be a little too much, so that's why we're going to send an email alert, but I just wanted to bring it to your attention because this is one of the candidates that we're looking to revisit. That's all I have for tonight. I hope you found the information useful and at least a good explanation of where we are with our positions and what we're doing with the overall market and why it's still a cause for concern based on intermarket relationship between stocks and bonds. We're going to have a good listen to what Ben Bernanke and team have to say Tuesday when that announcement comes out after the FOMC at 2:15 Eastern Standard Time, Tuesday, the 13th of March. I hope you had a great weekend. Don't forget, we will send an email alert when there's time to take action on any specific trades. Thank you all.